Welcome to Invest. We talk about investing, finance, and professional development. It's the core time of early in the morning on Saturday, 8:37 a.m. on the Eastern Time on April 8th. Hope you guys have a great weekend, and apologies for not posting in a little while. It's been a long week so far. Every single day I kind of have to wake up really early to commute out to the city. As you know, I live in the suburb of New York City, and next thing you know, I'm just on day-to-day, back-to-back type of meetings. And sorry for missing you guys. But with respect to Ethereum, $100,870, up about 0.27% so far. Something that's interesting is that across the market spectrum, it has not really moved the needle that much. But in the recent time frame, this week so far, obviously we got the job report, which we should dive in right now. Take a look at on a high level synopsis. It seems like the job growth total to be 236,000 in March, which near expectations of the hiring pace slows. Right, we're still kind of treading water right now. So in terms of the optics and also like on metrics perspective, non-farm payroll grew by 236,000 for March compared to Dow Jones estimate, which was 238, which is kind of on par, right? But below upward revision of the 326,000 in February. So it seems like we have slowed down a little bit. And with respect to employment rates, it ticks lower to 3.5% amid an increase in labor force participation against its expectation that would hold 3.6%. Average hourly rate has risen by 0.3%, pushing a 12-month increase in 4.2%, the lowest since June 2021. The unemployment rates for blacks tumble 0.7% point on a record low of 5%. So it seems like this is a relatively stale report. Nothing really pointing up or down. And you also want to be cognizant of the seasonality of a hiring pace, obviously around the holiday time period. Obviously shifting from Q4 to Q1. The hiring pace will be a little bit bigger than the other months, right? So and as you know, globally speaking, it's also a slowdown because of holidays in respective parts of the world. Technically, this week was a holy week in selected regions that, like Mexico City, Mexico, or other parts of the world that have or Israel even, have a good part, a big focus on, practicing the religious cadence, right? The Holy Week. They would technically not work, right? So timing like that can also be one of the mitigating factors. And take a look at other news. Seems like these news are relatively trivial. Tesla's cutting price for the fifth time in January, but nothing really pointing up or down. Like, seems like the news are just like trivial news. And we did end the market on Friday to be on a relatively positive note. And it seems like the 10-year yield is also spiking again, 3.4%. Okay. So let's take a look at the selling buying report that ARK Invest and BlackRock has done recently. Seems like on Friday was a relatively sell day, as you can see clearly, mostly red. BlackRock, let's see, right? I would say BlackRock's a little bit more. Yeah, I would say the same. It's more of a sell day than a buy day, respectively. So again, that's their perspective, right? So let's dive into technical to see what's going on in a more of a preventative and a foreshadow perspective, right? So Ethereum is 1868 right now, up 0.18%. You could see that we peak all the way to the 1950 at one point, but obviously this is basically driven by what the Shanghai updates with respect to Ethereum, and also the macro financial sector deterioration also drives some propellant, all to drive it upward from here. But in addition to that, we also saw obviously the anticipatory pressure from the job report, which with the anticipatory pressure that is positive, leaping it up to 1950. And obviously, as you get that relief, you get the opposition effects, right? So that's what happened exactly. So now we just kind of gliding at the 1850. But something that's not good is because this looks like an upward wedge. If you really look into it, it looks very prominent, like a triangle, right? That we have formed. And this is not just me, right? This is very clear that we are forming like some sort of upward wedge, and you could see that clearly on the below. The MACD is already trying to cross down. The RSI is also at the high level, 60 out of 70. On a weekly front, you could see this is also large separation. The upward wedge is even more prominent. We are at 60 out of 70 on a weekly as well, so not too good, right? Monthly, it is looking quite bullish. We are at the 50 out of 70. We are looking to kind of elevate from here. You could see that the golden cross about to be formed, but again, months out, right? So what it's saying is that it is looking good. It's not a bearish sentiment. It's not a bearish chart in the, I guess, like I would say months away. But in the near term, we do need to kind of I guess consolidate and correct down to a more of a tolerable level, because this is way too this green candle kind of disrupt the dynamic of the trends in a way. So and the green candle is mainly due to what, like just consecutive days of news around financial sector deterioration, and obviously and seems like the news is kind of blow over now, and SVB, obviously it is what it is. Signature Bank, it is what it is. Credit Suisse, it did get bought out by UBS, but it seems like we are not really shaking the needle that much, so I don't foresee any other banks to be closing down. So we got over the hump. I would say the worst has mostly, I guess, at least at a psychological perspective, baked into the market front, so we should be good, right? So Bitcoin is a little bit even more elongated at 63 out of 70 on a weekly. Daily, it's interesting. It's on the opposite side of the spectrum. So it is looking like we are forming like just consolidation, not really up or down. At 60 out of 70 on a monthly, we are looking to form a golden cross soon. So Bitcoin looks in near term, not too bad. Like looks quite bullish actually. But obviously it needs to kind of go through that dance, right? We are still relatively high, right, at 60 out of 70 on a daily and a weekly. So we'll see, right? So let's take a look at the index front before we hop off and go on with our days. We at the 409. It seems like we're still at the reverse head and shoulder pattern at the 56 out of 70. Daily, it is looking very dangerous. Like you see this large separation. We are also very sky high. So the equity market does look quite extended right now. Daily, weekly are on par pretty much. On the monthly, you could see that we are looking to glide up eventually. So something to understand is that bull market seems to be coming. And I'm excited for it, but in the meantime, we do need to kind of see some sort of a correction and normalization, because it's relatively sky high across the whole market front. Okay. So I appreciate you for joining me this Saturday morning. Apologies for obviously not keeping in touch with you guys for as sufficient as I would like, obviously. But I'll try to get better on maybe my time management skills needs some work. But my schedule looks bananas every day. But I appreciate you for your patience and your I'm really grateful. So I appreciate it. Have a great weekend, and I'll check you on the next one. Take care. Bye.